Hi there, it's Jeff back again with another in our key topic videos. This time let's look at nationalisation. Now, a state-owned industry is a nationalised industry owned and operated by the government, as distinct from the private sector, and these industries are often established to provide essential public goods and services, or services that are seen as being in the wider public or social interest. In terms of the UK, things like Network Rail, Channel 4 is state-owned. National Air Traffic Services and NATS, that's a public-private partnership. Ordnance Survey, the Royal Mint, and of course the National Health Service is state-owned. We have private sector healthcare, dentists, care homes and so on and so forth, but of course the NHS is the dominant service provider. So Network Rail, state-owned, and their job basically is to maintain, operate and hopefully improve the infrastructure, the rail infrastructure, the tracks, the bridges, the tunnels, many of the stations, upgrading, expanding the network, maintaining safety and reliability. Any profit they do make doesn't go to shareholders, it's reinvested into the rail network. And that Network Rail on occasions can make several £100 million of profit every year. Channel 4 is a publicly owned, not-for-profit broadcaster, so most of their output of programmes is funded by advertising and sponsorship. The government did have plans to privatise Channel 4 a year or two ago, but they were quietly dropped in early 2023. It'll be interesting to see what happens to Channel 4 in the years to come, particularly if it's competing with the likes of, obviously, the BBC, ITV, Sky and many other private sector providers. So what are some of the key arguments in favour of shifting towards state ownership, away from the private sector towards state ownership? Well, I've listed four here: public interest, social equity or social equality, service quality and job security. Some of these have been more relevant, I think, to some industries than others, but let's go through the main points. In terms of public interest, state ownership is often argued for by economists who support the public sector to ensure that services are operated in the wider social interest rather than for a narrow conception of private profit. So be it education or healthcare, utilities, including transport and energy and water, they're often considered important, vital for the well-being of society. Now, obviously, value judgments come into this debate a lot. In particular, point two, when key industries are owned and operated by the state, then in theory, the benefits can be more evenly distributed. So, for example, the state might intervene to control prices to achieve allocative efficiency, or the state might use the tax revenues to fund investment rather than go in dividends to private shareholders. The government, driven by public interest, or their appointed regulator, may prioritise service standards and accessibility, perhaps a little bit more in the state sector than in the private sector. And there's also a question of jobs. Critics of privatisation, and we have a separate video on privatisation, argue that private companies driven by the profit motive often prioritise shareholder returns rather than job security, and that can lead to significant job losses, layoffs and cuts in real wages. On the other hand, critics of privatisation, those in favour of the private sector, indeed moving more towards privatisation, argue that state-owned enterprises may lack incentives for cost efficiencies. There may be some inefficiencies. So if you take businesses out of the private sector, there may be less incentive to cut cost. And there may be a loss of dynamic efficiency. Private companies are often perceived as being more dynamic and innovative because they're driven by the profit motive. State-owned enterprises may be more risk-averse, less willing to take risks due to the lack of direct competition, and also the sort of guarantee of government support. And you might want to link that out to moral hazard. If you have an industry that's guaranteed state support, there may be some moral hazard involved there, because there's always the prospect of a subsidy or a bailout to keep the service running. And more generally, I think, in terms of nationalisation, opponents of nationalisation argue that without the discipline of market forces, there's a loss of resource efficiency, overstaffing, low productivity, underutilisation of assets, reflected in inefficiency, a loss of productive efficiency, and often widening losses, which then require government financial support. Now, when it comes to the evaluation of this debate, I think one of the questions you might want to think about is the extent to which ownership itself state versus private, is actually truly that important. It may be the case, thinking long term, that the ownership is less important than the extent to which the industry is actually open to some form of competition. So is the industry contestable or not may be more important than the issue of ownership per se. And of course, the quality and the strength and the effectiveness of regulation is super important in these kind of debates. A regulator with strong powers, effectively enforced, can often be quite a useful surrogate competitor. Surrogate consumer when there is no competition. And there's a whole debate about how effective Ofwat has been, for example, in the UK water industry, in holding privatised water industries, utilities to account. On the other hand, of course, if you have regulatory failure, then it doesn't really matter who operates the industry. You're going to get disappointing results. And if you've seen my video on natural monopolies, I made a key point. We might want to make a distinction within an industry, within a market, between the network provider, the grid, the operator of the big network, and the final mile service. So, for example, with water and telecoms and with rail services, often what matters to consumers is the quality and the price of the final mile service. What you want, perhaps, is an efficient natural monopoly running the network and competition at local level, the final mile service to the consumer. In an exam, please avoid making lazy assumptions. A lot of students in these debates assume automatically that the private sector is always more efficient and more innovative than the state. That is not always the case. Now, one of the big topical issues at the moment is the water industry. Do you think water companies such as Thames Water, Northumbrian Water, Yorkshire Water should be nationalised and run in the public sector or privatised and run by private companies? Well, the UK's water industry is responsible for collecting, treating and delivering billions of clean and safe drinking water every day. It provides wastewater services, obviously sewage. The industry in the UK was privatised in the late 1980s, and they created privatised regional water utilities. There was a little bit of competition for big water users, but from the vast majority of us at household level, we have a regional water utility. In Scotland, water and sewage services provided by one state-owned company, Scottish Water, and Northern Ireland Water does the same in the province there. But England and Wales moved towards the private sector in 1989. So a big debate. Here's the average household water and sewage bill combined in the UK. It's now climbing up towards £450 or £10 a week. Quite big variations, though, between utility companies. They're not all here. You can see in most cases, not all, but in most cases, bills have gone up. Actually, have gone down in South West. But in some cases, have risen quite sharply. Wessex, for example, a 10% rise in bills there. And quite a big rise there in Anglian utility from 427 to 492. Now, this is a huge industry, operates at scale every day. Thames Water deals with over 4.5 billion litres of sewage every day. That is a lot to cover. And Thames Water is heavily in the news at the moment, loss-making, financial difficulties, state-owned. Should that be privately owned? Should that be moved into state ownership? So this is a truly huge scale industry. One of the topical issues, of course, and you can't divorce it from the state versus private debate, is the discharge of raw sewage into waterways. This is just for England. United Utilities came top of this rather dubious league table in 2022. 69,000 times that United Utilities discharged raw sewage into tributaries, into waterways. Many of which, of course, were prompted by effects of storms and very high water levels and floods and things. But this is routine. This is enormous. And the biggest cause of river pollution in the UK is untreated sewage from water companies, along with other long-term issues, long flushable household items, fatbergs and things, litter and fly tipping, business pharmaceutical waste, road surface runoff, and so on and so forth. The water industry has a huge issue, an enormous issue with river pollution and beach pollution as well, in incredibly significant externalities. What's the case for nationalising? I'll take you through what I think the case is. I'm in favour, by the way, of the water industry in the UK being nationalised. So you might want to have a debate and think about the counter-arguments. Nationalisation would allow regional water utilities to operate more in the social interest. Now, in theory, if you state-own a business, you price not for profit, but for social welfare. So in theory, that should allow the government greater control over water and sewage bills. It will be a move away from profit maximisation. Now, I won't show the diagram in this video, but we will show a diagram showing price capping and how that could reduce profits, improve consumer surplus, but the consequence would be lower profits for the companies. Now, lower bills for households, in theory, in real terms, for example, if bills came down, it would increase their consumer surplus and effectively increase real incomes. And there are many, many households who are struggling in the cost of living crisis, not just with energy bills, but now with rising water and sewage costs as well. The other key argument, I suppose, for state ownership is that water and sewage is essentially a natural monopoly. And really the prospects of genuine competition between rival competing suppliers, certainly the level of operating the grid and the water distribution and the sewage networks and the reservoirs, it's just not an industry with potential for the usual competition between rival suppliers. It just isn't the case. And if you're state-owned or state-funded, then in theory the government should, through the issue of bonds, be able to borrow more, and billions more, at lower long-term interest rates than the private sector. We know this is an industry with enormous capital investment needs. The issue is ultimately who should pay for that. Well, if you're state-owned, then the government might be better placed to borrow the money at lower long-term interest rates to fund the capital investment needed to address the issues of discharges of sewage into rivers and beaches. Huge issues. So I guess the issue there is one that's highly topical. State versus private. It's a big issue in economics. It is always in the news. So stay tuned for some more topic videos on this. Thanks for joining me. Take care. See you soon.